The following segment is sponsored by El Tigre Silver Corp., trading on the TSX Venture Exchange under the symbol ELS.V and on the OTCQX as EGRTF. El Tigre Silver Corp. Is focused on silver exploration and development in prolific Sonora State, Mexico. Find them on the web at eltigresilvercorp.com. Join me for a conversation with a frequent guest of the show, David Morgan, the Silver Guru, an expert on money, metals, and mining, also a lecturer and an author. Mr. Morgan has written Get the Skinny on Silver Investing, available on Amazon.com. His website is themorganreport.com. David, welcome back to the program.
Oh, it's good to be with you.
It's been about a week since we had that big smash down in the precious metals market and commodities. We could speculate about the cause of that. One of the things that I came up with was the Feds just wanted control over all monies, period. And when you get into gold, the gold standard and states' rights and all that, then it gets out of the hands of the powers that be. What are your thoughts?
Well, exactly. I mean, the whole idea, as we've talked about in the past, and we should continue, is that the idea was that individual rights, the rights of the individual human being, were God-given, constitutionally secured. And the people, had all the rights. All the rights resided by the fact that they were inalienable rights. The fact that you were born gave you the right. And the restrictions were, one, you could do anything that you said. In other words, you had to live your word. Your word was your honor. Your sacred honor was your word. If you said you were going to pay X amount, or you were going to put up a building, or you were going to do whatever, you did it. If you didn't do it, then you had to have a legal remedy. And the legal remedy, of course, got involved sometimes at the state level. So all of the rights resided in the people. Some of those rights were ceded to the states, and the states ceded some of their rights to the federal government, which overlaid the states or connected them in a contractual relationship for basically, at the beginning, we're talking about the beginning, the initial concept, for protection. In other words, and then as things evolved, there became the Interstate Commerce Clause and on and on. I mean, it's just so convoluted now. I could spend 27 weeks on it and not cover it all. But anyway, coming back on point, yeah. So what do I think? I think that that's the direction we're starting to move again. I think the pendulum has swung too far to big government, and I think it's swinging back the other direction.
Well, it's swinging back in the other direction, but in the process, some people are getting hurt.
Well, that's true. I mean, the reason being is that I've taken something very elegant and rather simple into something extremely complicated, where I don't know if this is true or not, but you hear all the time in the circles I run around in that the average citizen out there breaks, 2 or 3 laws a day and doesn't even realize it. This thing, again, has become so cumbersome and convoluted, we really don't know where we stand in so many areas. So, again, people are getting fed up. I mean that as a pun and as a non-pun. In other words, they've had enough. And then the Federal Reserve System that most people now realize is a private banking consortium that basically controls governments, because money is power. Money is all powerful in a lot of ways. And because of that fact, these, too big to fails are basically not failing because they're putting the burden on the back of the people. Well, the people are broke, so how's that going to work?
Let's go back in time just a little bit. It's 2007, 2008, 2009, maybe even 2010, and we're looking at $1,400 gold in April of 2013. That still looks pretty good, doesn't it?
I think it does, yes.
Let's step back even further. Let's say some folks wanted to profit in the gold and silver market, and they drove the market up a few years ago, and they're just profit-taking now in a concerted effort.
What really happened is technically the charts broke down. All the futures markets run off the charts. It's a fact. Was it a setup? Probably. Was there collusion? Probably. There was an inordinate amount of selling. When you sell naked shorts, you sell gold and silver that don't exist in massive quantities. The market doesn't care because it's a sale. It's an electronic sale. It's a derivative sale. Nonetheless, it's a sale. And this thing got just creamed. And then there's, of course, things that follow suit, because you have like these large ETFs, and they do have some physical metal backing them in most cases, if not all. And this metal, of course, has to get sold because there's people wanting to redeem or sell out their shares. So it kind of feeds on itself. So you had kind of a feeding frenzy to the downside, massive volumes, huge volumes. And whenever you have big volume in one direction or the other, it's very important to pay attention. And so it'll take some time to rectify the situation. So basically, I think it was a bullion bank / central bank psych ops operation. Hugo Salinas Price did a very good article on the psychology behind this. And basically, it's the bankers, in my view, and I agree with him and many others that have said similar things. It's like, look, you don't want to be out of the dollar. You don't want to be out of the yen. You don't want to be out of the euro. You want to be in these wonderful paper currencies, because if you're not and you're trying to find a safe haven in gold or silver, look at what can happen to you. Oh, shame on you. You don't want that metal. You want to be safe. You want to be in the bond market. You want to be in the stock market. You want to be in these safe situations. Well, I have news for you, folks. Those are about as safe. They are not safe. All investment classes are risky. All. The safest one of all in a long period of time, of course, is gold and silver, but more gold than silver. Gold is less volatile. And we had some studies. I watched 3 or 4 of the Bloomberg updates on gold, and I just couldn't take it anymore. I mean, they did one on, the real price of gold is $800 from some professor, and, I always question some of these articles. I mean, this guy's probably smart. He's got a PhD. I've only got a master's, whatever that means. To me, it doesn't mean much. So he's basing gold on the ratio between gold and the CPI. Well, for crying out loud, who in their right mind that can think beyond the ability of a kumquat thinks that the real CPI that's produced by the government is worthwhile? So he's basing his whole analysis that gold should be $800 on a fictional CPI that's been changed so many times and so convoluted it has absolutely no meaning. I mean, we're in the 1984 reality. War is peace. Freedom is slavery. Gold going down is beneficial to the world. I mean, it's just unbelievable. And yet, you get the Bloombergs to sit there and parrot this nonsense. And unfortunately, so many people are undereducated on money, metals, and mining, especially money, that they don't get it. They say, oh, wow, this guy's a PhD, he's a professor. Bloomberg ran the article. Oh, my goodness. Gold's only worth $800. It's at $14 now. Oh, I'm not touching gold, which is the primary purpose. The primary purpose is to move the market in the direction that they want to move it. And again, and they're probably buying here. I mean, there's been articles on that. I don't know. I do know the central banks have been buying. I know one thing I think I could say with very much authority, and this isn't my authority, this is the authority of the industry. China and Russia are very happy to continue to buy gold. They're even happier to buy it at a lower U.S. dollar price, and they have not abandoned ship. And the other thing you got to look at is something very simple. Like, go back a few months. You went back in time. Let me go back in time. Germany says, hey, we want our gold out of the Federal Reserve Bank in New York. And the Federal Reserve Bank in New York said, what? Well, no, we can't do that. It's going to take like 7 years to get your gold back. And then another month or so goes by, and Texas, the Republic of Texas, Texas State, part of the several states of the Federation of States, says, hey, we want our gold back. And they say, oh, no, you can't have it gold back. So there's so much gold floating around, you could sell, billions of ounces, millions anyway. What's the problem? There should be no problem. But there is a problem. So there's 2 markets. There's this fictional paper market that sets the price, and then there's the honest-to-God physical market, where there's huge premiums right now for people to get the real deal. And at some point, those markets will move away from each other. Right now, you can probably still get real delivery from the COMEX on silver and gold. And will that last forever? I doubt it. Will it last for the next several months? I think it will. There's articles out there saying, no, that's not the case, that, it's imminent that they'll fail. But the problem that some of those writers don't get, in my opinion, is that about 98%, and actually even higher than 98% of those contracts are always settled for paper anyway. So, and in the rule book, when you sign a contract and you claim by checking the box and signing your signature that you've read the rules, most people don't, they just sign the forms because they're too difficult to understand and to read, says right in them, that you have to settle in cash if we say so. So how would that be a default? A court of law would say, remember, go back to the basic premise, do everything you say you're going to do. You signed a contract saying you'll abide by your rules. It's a contract. And the contract says you will settle in cash if the CME, the Commodities Mercantile Exchange, says settle in cash. You already signed your name saying yes. So how's that a default? It's not. You signed the contract. So, I have trouble with some of this stuff on the net, as you know, Ellis, and certainly, I am on the side of an honest financial system. I basically put my life into this, and I want that for everybody. It's an idealistic look, and it's certainly unattainable overnight, but, we got to keep moving that pendulum the correct direction, in my view, and that is to more transparent, open, honest system. I think it is moving that way slightly, but this correction, if you want to call it that, I call it more of a collusion in the metals market, is going to take some time to repair.
We'll be right back. The Ellis Martin Report is sponsored by El Tigre Silver Corp, trading on the TSX Venture Exchange under the symbol ELS.V and on the OTCQX as EGRTF. Silver has been considered a precious metal for 6,000 years and currency since 600 BC. It's been commercially mined in Mexico since 1530 in mineral-prolific and mining-friendly Sonora State, where El Tigre Silver Corp's 5,000-meter drill program is now underway. El Tigre's properties with gold and silver mining concessions span approximately 267 square miles. With an attractive share structure and a strong, proven management team, El Tigre Silver Corp is poised to identify a resource in an area that from 1903 to 1938 produced 75 million ounces of silver and 380,000 ounces of gold. Additionally, their tailing stockpile is currently progressing to production. Learn more about El Tigre Silver Corp by visiting their website, eltigresilvercorp.com, or click through El Tigre's logo on the homepage of our website, ellismartinreport.com.
We offer expert opinions only. Find them on our website, ellismartinreport.com. That's ellismartinreport.com.
So we see some chaos. We don't have, in your words, an honest financial system in place. How do we invest in it, David? How do we invest in it right now? What do our listeners do?
Well, if you look at it, all comes down to what's called confidence or trust. And, if you've got a piece of gold that's, some purity that that's something you don't have to worry. It's not a trust issue. Does the paper price fluctuate? Well, obviously it does. But it's something solid, something that has historical significance throughout the recorded history of mankind. You can't say that about a U.S. dollar or a Zimbabwe dollar or the yen or any other fiat currency. They've all failed. Every one of them has. And just because the bankers are able to spook the majority of the population doesn't mean that, 1% can't escape, or maybe 2% at the top of the market. And I think you should be conservative. I've stated I think 20% is enough, You don't have to put all of your money in the metals. 10% is probably enough for most people, and 20% for people that are aggressive. People say, well, where else should you invest? Well, I think commodity sector is the place, personally. I sort of agree with Jimmy Rogers. I think you should look at energy. Everything in the world runs on energy, not on the metals market or even on the fiat paper system, even though most people think that's what it runs on. No, it runs on energy. So energy is a good place to invest. Water, food, look at the necessities. And people say, well, shelter is a necessity, there for housing. Well, that's a different thing. I don't have time to go into it. You don't really want to buy anything that's really high in debt, and the whole mortgage market is a debt market. So there are cases, farmland, I think, Mark Faber, Dr. Farber has talked about that times. So there are other areas. I just happen to specialize in the precious metals arena, and that's certainly, I think, extremely important. But it's not the only area. And, of course, always yourself. Invest in yourself. Get a better education. Learn a new skill. Read more. Do more. Be more. There's a lot of things you can do just on a face-to-face basis. You don't have to change the world. Just, helping someone else understand what's really going on out in the economy. That's something I think that's very worthwhile.
Well, that certainly is very, very good advice for anyone listening to the program, no matter what their status or fortune is in life. You can always improve upon yourself. Indeed, very good advice, David. I don't see the bullion dealers complaining right now. It's a buyer's market and it's a seller's market for them, and they're doing fantastic business at these prices.
Yeah, there's huge demand on the physical side of the market for both gold and silver at these levels. A lot of them are backed up, meaning that they're delaying. They're taking orders, but they're saying you're going to have a 3-week delay, 4-week delay. or more in some cases. Some dealers that are well known on the internet for having, very low markups, very good prices, in other words, basically closed shop. Some of your smaller dealers that don't really hedge, they just close up. They might have inventory, but they don't want to sell at a loss, so they just close shop. But the point is that there is a very robust demand for physical metal, and I think that will continue. So I look at it again as like the 2008 financial crisis, and that one you could say, gold and silver went down for a reason. I mean, things were unwinding rapidly. But in this instance, you got to look at why, and the why here is, no one can say with absolute certainty, but it certainly looks like the bullion banks and the powers that be, maybe the central banks as well as the bullion banks, wanted this thing to get clobbered. Again, it's a perfect setup for them. I mean, technically, it was one place on the charts for both the metals, gold and silver. I said 1550 on gold and 26 on silver. Those are rough numbers. There's others you get a different number that's very close. Anyone else that does technical work, their numbers are very close to mine. Regardless, the numbers isn't exactly the point. The point is that once it reached a certain level, there was very little support. This is basic technical work. This isn't even that advanced. And once those levels were broken, look out below. And I warned my members about this several times. I mean, and then when it got right to the kind of the finish line, I thought it would hold. I really thought the $26 level would hold, but when it didn't, I was putting out a lot of videos that week. I said, look, it closed on the low at the 26 level on the low. That's a sure sign that it's going lower. Look out below, and of course that's what happened.
A great many people made money once the market came back around 2010 or so for the time period that did with regard to metal stocks, and they're much more beaten down today. So is this even potentially a bigger opportunity right now?
I think it is a bigger opportunity. The concern I have is how many people have given up, or how many people have been worn out or scared out, or how many people have cash at these levels, and the answer to that is I don't know. But as far as opportunity, wow. This is an opportunity. Now, you've got to be very selective because there's a lot of junior companies out there that won't come back. There's some that are just going to be dead because it's going to take too much time, and they're not going to get funding. The old buy low, well, the buy low might be very true, but to buy low in a company that's viable, in other words, that's solvent, that's going to be able to last. So if you're thinking about a company, you better do the research or have someone help you with the research. And I'm not trying to sell my report. That's a good place to start. There's several others out there. But if you're on your own, that's fine. But do your homework. Look at what the Treasury has and find out what the burn rate is. So if it's got $1 million in the Treasury and it's burning that $500,000 a month, it's got 2 months left. If it's got $1 million in the Treasury and it's burning at $10,000 a month, then you probably could look at that company and probably, get through this. And I'm just using those as numbers. You can bump those numbers up by any factor that you want to. But you've got to take a real good look before you invest here. You've got to really be selective. But there are companies that are so levered to the upside because of beaten to the downside so much that there will be fortunes made in this sector 2 or 3, maybe 4 at the most years out from now.
Is David Morgan taking any money off the table and investing right now based on what you just said?
Well, I'd say it a different way. I mean, I've had cash on the sidelines because I have a trading account. And I haven't made, I had a trade on at 29.40. I said the trade, silver had to go up through that. It had to be good volume. And it never happened. It went down. So I never got an order in because I make the money. The way I trade, I make the market prove it. I don't tell the market to do anything or try not to. I like the Richard Russell approach. The market knows more than any of us, and when the market's proving itself up or down, whatever it's doing, then that will dictate what to do. And right now we're very low, sentiment's horrible, and yeah, I've saved some cash in my trading account. Yeah, I am taking advantage of it right here and right now. Yes, I am.
Let's finish up with a discussion about the Morgan Report, David, for those that are not subscribers at this moment.
Okay, well, let's talk about, what they can get for free because, I know people always want something for free, and one is that these type of interviews I put on the YouTube channel, which is Silver Guru. So if you go to the YouTube channel and subscribe, we try to put all of these interviews up on that channel. We have been moving some to the front page of themorganreport.com. You can also go to Twitter. I put out some articles there that I think you should read at SilverGuru22 or SilverGuru22 at SilverGuru22 is a Twitter feed. As far as the free email list, I think that's about the best bargain in the industry. Basically, if you just go to the website and scroll down to the bottom of it, there of the website, that's silver-investor.com. If you do that, you'll see join our free list. It takes about 2 minutes or less, and you can get on our free emails, and that usually has all of the interviews I do during the week and a question of the week. So that's all about the free stuff. As far as people that actually want to make money and get some analysis, that is over on the right-hand side of the website, and there's a little pull-down menu for the Basic Plus Trading Membership, the Premium Membership, and the M3 Alliance. And all you have to do is click those, and you will get all kinds of information on what those are and also a video that explains it. So all you have to do is go to the website and spend a few minutes on the Basic Trading Membership, Premium Membership, or the M3 Alliance, and you will find out what your money will do for you as far as trying to navigate this very interesting, very satisfying, yet very beat-up sector.
So you are finding satisfaction at the moment somehow.
Oh, yeah. I mean, I've been through it before, but you got to remember my age and how long I've been in these markets. So, stuff that will rattle even a seasoned investor definitely does concern me, and does it get to me somewhat, yeah, but much less than, let's say, when I was 30 years old, where, I'd be running around with my hair on fire. I mean, I just don't bother with that anymore.
David Morgan, the website is themorganreport.com or silver-investor.com. Thank you so much for joining me today on the program.
You're most welcome.
You can listen to the segment again on the podcast page of our website, ellismartinreport.com, or find the Ellis Martin Report in its entirety on iTunes.
This segment has been sponsored by LT Gray Silver Corp, trading on the TSX Venture Exchange under the symbol ELS.V and on the OTCQX as EGRTF. LT Gray Silver Corp is focused on silver exploration and development in prolific Sonora State, Mexico. Find them on the web at ltgraysilvercorp.com.